you always stress it, this way that macro, you can see the trends, nothing happens, the world ignores them, and then all of a sudden it has to start paying attention. And we're definitely, the process has started, right? A lot of the things that we've been flagging have started. The classic being, we were very skeptical about EM. Remember last year, talking about EM.
Yeah, and you were like, well, you need to lighten up. And then, EM rallied a bit further. People's like, well, what's this all about?
Right.
And then you actually put out a short trade recommendation last month.
Yes, this month.
And it felt like a stone.
Yeah.
And I just think there's a lot going on in EM that people don't see.
Right.
Because it's really deceptive when the S&P is going kind of, the S&P is okay. There's a lot of these leading stocks are still going to new highs. So people don't worry about stuff.
You can have these periods of divergence, right? That's the key, word that people, the US is diverging from the rest of the world. Well, you and I have been long enough in the tooth to know that is never sustainable, because divergence definitionally means...
Every time people start writing about decoupling.
That's what they call it, decoupling, yes. So you can get this decoupling, and what happens essentially is in a decoupling, and you can see the dynamics are all there to have a decoupling. US rates are significantly higher, so money continues to pour into the US bond market. US equities are outperforming, partly as you discussed because of the buybacks. The dollar's strong, so there is this natural sucking of cash back into the US, but it is highly toxic because we still live in this legacy dollar world, and it means, look, from an investor perspective, and for all you guys out there, yes, you're running stops closer, you're running risk tighter because things are getting more unstable. But yeah, where you're running that risk is in the US, and you're not touching any of this. But the trouble is more and more liquidity is pulled into the US, the more these other things crumble.
And almost everything is a short dollar exposure.
Correct.
Almost all risk assets right now. And I don't think people understand those macro linkages.
No.
And I think that's super important. I mean, the one that I've been trying twice now is the short side of oil.
Right.
Because for me, there's two things left in this global equation. Almost everything else is crumbling.
Yep.
We've got the US equity market and the oil market.
Right.
And those two things are the last providers of liquidity and returns.
Correct.
In the market. Both have got massive all-time record speculative positioning. And my fear is that obviously the oil is priced in dollars.
Yep.
So if the dollar is strengthening, oil should start weakening. So it's opening those alligator jaws. Trump is already trying to talk down the dollar. There are some structural supply problems, not the dollar, sorry, oil.
Yep.
There are some supply problems that will get alleviated.
Yep.
And if you're not careful, that's what's holding up the ISM to me, because such a large part of America is the oil patch. If that goes, then I think everything goes. And the equity market is part of that whole final part of the risk taking. And you and I were talking off camera about the rolling top in 2000 and how similar this is, where first is the bond market yields peak, then it usually ends up being emerging markets. Then maybe the equity market, or
elements within the equity market.
That's
Remember,
right.
I mean, I think
that's right, because the leaders always keep going till the end.